Okay, once again, afternoon, guys. The recording is going now. We're looking at the grid fibs. We're going to work through the whole trading plan according to the input from everybody and what was given to us over those 3 Saturdays. Once I've done this, what we're doing is we're taking all the notes, which I'll send you now, or just a brief outline of what we need to watch for. And Anthony, in the next week or 2, will be making a nice video out of it so that we've got the strategy in writing and we've got the strategy on video available on the website. Okay, so let's get going. So what I've done, and I'll take this picture just now and I'll post it on the group, is I've just done, according to grid trading, okay. This is a problem. Okay, I'll start again and we'll work through it slowly. That's going to be the better option. I have saved that, so let's just go for a new one, and then I'll take the saved one and I'll post it on the group just now. Okay, so when it comes to grid trading, let's just fix this. First thing is, let's look at the first aspect of it, which is the trading times. Now, what we don't really want to do through experience is trade this in huge volatility. In other words, when the Dow opens, when the UK opens. Sometimes it works in your favor, but a lot of times it will just spike, take you out on the stop, and then go. So to be safer, what we're suggesting for trading times on all markets is 9:30 to 1500 hours. That's fine. We can trade in that time frame. So what we've done now is we've allowed Europe to open, we've allowed London to open, and then looking straight after that, we've got out of that volatility. And then from 1500 hours, we don't trade. So then we trade again from 1600 hours to 2100 hours. So we also want to ignore the volatility in the last hour before we go into closing bell. We generally find there can be a lot of volatility in those time frames. So really from 9:30 to 3, and then again from 4 to 9 at night is great. Those are trading times on the system. Okay, so the first thing we need to do when we identify this is identify the trend. And what you're going to be noticing in a little while is that we're going to be focusing not only on 5-minute trading, but on hourly as well, and even end of day. The system works very well. It's just a question of getting our admin in place because it gets very busy. So what we're doing is we're watching huge markets the whole time. So trend is defined by 8 EMA, 21 EMA. So as long as the 8 is above 21, we only take the longs. And as long as 8 is below 21, we only take the shorts. Okay, so that's the definition there. The next thing to do is determine where to draw the fibs. Now, as a basic rule here, what we're looking at is significant high and significant low. So the rule for that is with significant high and significant low, we use the stochastic. as a guideline. The stochastic must be on 0 for low and 100 for high. Now, yeah, we can use our discretion a little bit. When I say that, is divergence counts. So if we identify a significant high, low, and there is divergence, we accept that as a significant high or low. So that's quite important. Okay, so let's have a look at that quickly. You can look on the dial where I've just adjusted the fibs now on the 5 minutes. Now, we need the basic stochastic. That is over there. Now, initially what I had is that this morning. So significant low here is correct. Okay, significant high there. Stochastic was on 100. There was a little bit of divergence. You can see that there. So that's accepted as a significant high. And then we go to significant low. There it is there. That's acceptable. Now, the next rule is zones not to trade. $89 to 100 and 0 to 11. We also don't trade below 0 or above 100. Now the reason for that is 0 to minus 127 or 100 to positive 127 is generally a very long target. So what we must do rather is, if we do break 100 like we just did on the Dow now, is we're going to move the fibs. Okay, so let's look at that again, because it's nice. We've just had that example. So there's our significant low, there's 100. Now our no trading zones, quickly you'll see on the pictures I send, I always put a little blue channel in there. So I just want to fix that quickly so we can see. So it's 89 to 100 is no trading, and 11 to 0. Now why? Why won't I trade those levels? If we think about the extension fib, so often we see the failure at 89 and we see the failure at 11. And it comes back to an old story where if we've got a trend, up we go and we sit there. And this we have spoken about in previous training sessions. There's the 100. There's the 0. And what we find so very often is that if we get that type of move like that, and I put a horizontal line there. So what I'm suggesting is, if we get this little ABC from the top, 0, A, B, C, what we find so often is we retrace all the way back down to the 11, which is an 89% retracement of that move. And it gets to the 11 or around the level and then bounce up, giving you typically an possible extension fib for a long. So what we find too often is we fail at the 11 and at 89. So for that reason, I've put a no trading zone in for that particular level. So that I put in blue over there. Okay, so we got some trades this morning. We've identified the trend, which is 8 above 21. In this particular case, I'm just going to zoom in nicely. There it is. And It's the little green dotted and the little red dotted. 8 is above 21. Break of the 77. There was our trigger long. That's where it hit the 89. Above 89 to 100, we're not going to trade. We're going to move the fibs. So where do we move the fibs to? And we just look at the previous significant high and low. So once again, let's use the stochastics. So there we go. Sorry, wrong one. That was the last significant low. Stochastic goes on 0, so that's all good. If you look at all these little places in between, stochastic wasn't at 0. And that will move then to Friday's high, because that was the previous significant high before that. There we are. Let's get them exact. This now moves up. Between 89 and this one will move down between 0 and 11. Just squeeze that down. And there you have it. There's our next levels. So we've missed the 61. The possibility there was a double top, it broke. If we had moved a little bit earlier, we could have traded this 61 to 77 and it's halfway there. Okay, so that's really how the fibs are going to work. Is we're just going to go to a bigger picture now. Initially, when we had our fibs just on this level over here, the target between levels was around about 40 to 50 points. You can see now clearly the average target, depending on the level, in this case it's 124 points in 5 minutes. That's great. That really is very, very nice. So the bigger the distance, obviously, between the high and the low, the bigger the targets are going to be. So that brings us to the next rule. And that is very simply, if the target, perhaps that's the right word, between fib levels is less than 30 points down and 20 points on DAX, we don't trade. Then those levels are just too risky because we have to take the spread into account. So if the targets between the fib levels is less than 30 points on the down, 20 points on the DAX, we don't trade. So the smallest level there is probably 50 to 61 or 50 to 38, depending if we're long or short. If that's not at least 30 points on the Dow, we're not going to trade it. It's just too small. We're going to rather just sit it out. Or the fibs are in the wrong place. Okay, so that's what we're going to look at there. The next point is to identify the swing high, okay, so that we have to do. And thank you, Derek, for the work you gave us there. It really has helped this strategy out so much. What we're going to do with swing high, swing low is just go back to the basic concept of this. And the basic concept of everything we do revolves around a 50 SMA. So that's simple moving average in any time frame. And we know markets move in threes, so 0, A, B, C. And we also know that markets consolidate around the 50 moving average. In other words, we start off a significant low, which is where your fib will be. And we go up through the blue and we consolidate in this area a little bit. Now, just bear in mind that when we are consolidating around the 50 simple moving average, your stochastic level is also between 61 and 38. We're consolidating around the 50 of the stochastic as well. So that's our area of consolidation. But typically what we do is we get trend retracement and then we start trending again. And what we've always suggested is that distance there and that distance there will be the same. So what we do with our price action is we identify the distance from the significant low to the 50. And let's just assume that's 100 points. We then take it from the 50 there and we measure up 100 points. Now, the market is not always going to get exactly to that point. And we know that from the ABCs, because when we do the fib, our ABC target is the 89. It's not the 0. It's not an exact, precise science. So in this case, to identify the swing high, we take 80% of that, which would be 80 points. And we identify that as a target roundabout there. And I put a little label in there, swing high, swing low target. Now we're going to look at that just now. It's different options as when to get out. Is should we get out of that or should we trust the fib? We're going to look at that just now. So the next thing was to identify the swing high, swing low. Let's just look at an example here. So I'm going to zoom into the Dow. I just want to take the earlier trade this morning. So let's just put that back. So I want to assume that we, for example, last night trading a short here. Let's just get this right. So what we had last night, if you look at it here, green crossed, red over there. So trend is down. So typically there we're going to trade 89 to 77. Now what we do is you can see where we cross the 50 moving average there. Measured to the highest point to the left is 54 points. So 54 points times 80%, call it 45, somewhere around there. And we measure down from there. 45. So that level is 25625. Round about there, and I take that label for you and I put swing high, swing low. Now, in this particular short, I would have felt very good about going short because my swing high, swing low target is below the 77, which is my take profit. We'll look at entries and exit just now. But we have to identify that. It did continue going. Okay, so another example this morning for the long. Sometimes they work, sometimes they're not 100% perfect. But we do that measurement as soon as we can. Okay, so we're looking at 50 moving average this morning. In this case, it followed through right at the bottom. So we would have initially taken that level to that level, 80% of that move, and then it just continued to go. So we do identify the swing high, swing low, because if we get to a situation that my swing high, swing low target, for example, is below the 89. So let's suggest we're trading 77 to 89. Swing high, swing low target is below 89. We start looking at yet options to exit the trade earlier, which we will discuss just now. Okay, so let's go back and discuss the entries. So we've identified the swing high, swing low. We've put a line in. We've got our target. Let's discuss the entries. And remember, entries always in direction of trend. Okay, so let's draw that. Now, let's discuss quickly for a long. So what we're going to have is 8 EMA is above 21 EMA. So we're trading in direction of trend in any time frame. We're then going to have our fib levels. Doesn't really matter what levels we're looking at. As long as it's not above 89, we're going to trade. So let's suggest here we've got 77, and this is 61. So price action sitting at this particular time is sitting there. Green is above red, we're good to go long. We don't wait for closes, we don't wait for anything. As soon as it breaks that fib level, we've taken the trade. There's the 50 of the fib. As it breaks, we've taken the trade. Let's assume the 50 moving average is coming through here somewhere. So what we would have done then is measured that distance there to get 80% of the distance there. Let's assume it's over there to give us our swing high, swing low target. Okay, so we've got that place, but as it's broken, we end. Entries in direction of 10 taken on break of fib level. Okay, so that's in direction, for example, of a long trade. For indication of short, if we sit in a situation where 8 is below 21, we would look at going short. So in this example, if we had some price action here, I'll put this price action in red. If we break the 61, we're looking to go short. Exactly the same time, I'm not going to do it on this drawing, is we determine the swing low, swing high target. First move based on the 50 moving average. Okay. 50 moving average is coming through there. So that's our entry taken on break. So as long as we're not trading 89 to 100 or 0 to 11, we're good to go. Taken a break and fib level. So that's the direction we're in the trade. Let's talk about stops. If we long, we have a fixed stop. In other words, it's put in the system. Fib level below. So in this example, we've taken the trade there. We are long. My stop would be on the 50. Now be careful here. Don't put it just above the 50. Put it exactly on the 50, because we've seen so often that it comes 1 or 2 points towards stop, and the spread stops it from executing, hits that 50 level and just bounces up. So what I do is I put it exactly on the 50 then, which means on the Dow it has to go 4 points below the 50 to actually trigger. And it allows me just that little bit of room to breathe on the 50 level. For example, of a short, we went short here below the 61. Stop would be exactly on the 77. That would be stop. And again, exactly the same principle. Put it exactly on the line. So we've got absolute fixed rules which is quite cool. Now, stop is in place. We have to have now a trailing stop, because everything about the strategy is we have to control cash flow. We have to control our balance. And as soon as we can, we want to move that stop up or down. If you can't take stops in the market, you can't trade the strategy. You're going to have stops. So the rule about that now. When price action has reached halfway between targets, so target is 77 there, entry is 61. As price action reaches 50% of that distance, stop moves up 50% of the distance between the 61 and the 50. In this particular case, when we took the short here, we're trading 61 to 50. So as price action reaches halfway, and it normally on that break happens very quickly, within 5-10 minutes, very quickly. As it reaches halfway, between 61 and 50, trailing stop moves halfway between 77 and 61. So when we initially take the trade, risk to reward is plus minus 1 to 1. As soon as we're halfway to target, risk is 1, reward is 2. And we try to get there as quickly as we can and just trade it over and over and over again. And we're protecting the cash, that's for sure. Okay, so let's just update that concept. So for long fixed stop, is the fib level below. For short fixed stop, level above. Yeah, that makes sense. As soon as 50% of the target is reached, stop moves 50% as well. I think we understand that. We've got that. Let's talk about targets quickly. And what we're doing from our side, we're trading to next level. So what I'm suggesting is we're putting fixed profit TPs in. Now, there has been some discussion about this. In other words, yeah, we went long 61 to 77. We've reached halfway. Stop has moved halfway. As it reaches the 77, we take profit. Now, a lot of guys are saying, leave it, let it go to the next level. And that is a call I'm going to allow every individual trader to make on their own. You're trading with us, you don't have to take the levels exactly as we do. But if you don't want to put a fixed stop in at 77 and try and get to 89, try and get to 100 and use a trading stop, that's great. No problem with that. But we put it at 77, we put a TP, hit it, because I believe in the system. And if you look at our stats, the system is working well because we're banking lots of little and the hit rate is great. When we're going short, in this case, we've got halfway to target. Fixed stop would be in at the 50. Why? Some of these levels are far more important than others. There's no doubt. Some of these levels are a lot more important than others. If we've got a basic fib, and I want you to think about extension fib, for example. safe trades versus unsafe trades. There's 50, there's 61, there's 77. Initially, we have it going up, so I've got no issue. And what I want to suggest is we trading short. Now, often the market comes back, 61, 38% retracement. It could be a B for a C up, but there's a better chance it's going to hit 50. And often we hit 50, and then what happens? Shoot up. Or we get a 61% retracement, so it comes back to the 38, shoots up. Or we get the most important, 23, which is a 77% retracement, shoots up. What I'm suggesting is while we're trading short here, this could be setting up for retracement for another long. So I prefer take profit, evaluate, take profit, evaluate, take profit, evaluate. If it breaks the 77, there is such a good chance you're going to go down to the 11. But the deeper we get into the riskier it becomes, because this could just be setting up for an extension fib in the opposite direction, whether we're long or short. And that's particularly why we're not going to trade 11 to 0 or 89% retracement lower. So what I like to do is just wait for it, take the profit, trade it again, watch it, take the profit, watch it, and then we can look at other options as when to get out earlier. Are we trading to next level and taking profit at the level? If it breaks that level, trade again. Now, for me, on the Dow, we're only paying a 4-point spread. And for me, on the DAX, we're only paying a 2 or 3-point spread. Those spreads are so small that it just makes sense. And a little tip I've picked up here that I just want to run through quickly is I find these levels are very, very strong. So I just want to make an assumption that, for example, is 77, that is 61. Trend is in place, we've done our swing high lows, everything is beautiful. And what happens is, and you'll see this so often, is we go up and we hit the take profit there. And what you invariably find is consolidation on that level. In other words, you get a little candle, for example, with a little wick that does something like that. We've hit TP after that. The market comes back, it consolidates a little bit, and we're breaking the 77 there. So we now want to go 77 to 89. Trend is in place, everything is good, ready to go. What I do like, and you'll hear this on Zoom when we live, is I just wait for a break of that little high. It costs me 2 or 3 or 4 points, but I just wait for that break just to confirm we're not making a double top there. And what I'll often do there is jump to 1 minute, because you can just see it and get in so much earlier. Is just wait for that little break before we go. Okay, so hopefully that helps a little bit. Okay, so we keep on trading. We stop at the 89. $89 to 100 or 0 to 11, between those levels, we don't trade. If we do break, move the fibs. So break of 0 or 100, move the fibs. Okay, the next thing I want to discuss is we've got the system is there. But options, exit a trade earlier. In other words, before target has been reached. So the first option, and my preferred option, is trust the targets. Okay. Second one is use 1 minute break previous candle high low once, swing high, low, target is reached. Okay, and this does add a little bit of comfort. Let's just put that into perspective quickly. Okay, so we got our fib levels. I'm just going to do this as an example that we're going long. So that is, for example, 77. So that is 61. And that is 50. Trend is up. Rate is above 21. Now, we started at a significant low all the way down here. We've come up, we've hovered around, and then we break. We're only going to get a trigger 61 to 77 because at this break here, 8 was not above 21. But in the interim, what we've had is a 50 moving average. So what we've done now is we've measured, just want to take this down a bit. We've measured swing low, and let's just make an assumption that's 100 points again. We measure swing high from the break of the 50, and let's assume it's around there because it's 100 plus 100, but we take 80% of this run on the swing high, swing low. So from the 50 moving average, 80 points is there. I've got the swing high. The swing high target. Now, price action comes along and we reach high target, but we haven't quite reached the 77, which is our take profit, the trusted fib level. We haven't reached that. So the suggestion at that point is reduce your candles to 1 minute and a break of the previous candle low if you're long, or a break of the previous candle high if you're short, is take profit there. So initially, that was our long, that was our stop. We've reached halfway, stop has already moved up halfway. We've reached swing high, swing low target. At that point, if you're nervous, you can reduce to 1 minute and a break of the previous 1 minute candle. You can exit. It has, in many instances, been good to me, and in some instances I get out and then it shoots straight up to target. It's a 50-50. So that we're going to discuss as we trade this together, and I'm going to allow you once again to use your own discretion there. Okay, so that is an option to exit earlier. Yeah, I think I've discussed that. So options to exit a trade earlier is trust the targets. Is 1 minute break, previous candle high, low, once the swing high, low target is reached. And the last one you can use here is stochastic down through 89 or up 311. So if we go back to this drawing, at this particular point, if we look at any stochastic, there's our 50 level, there's our 89 and 11. So as the market has moved up and we've broken to 61.77, I promise you the stochastic is shooting up. And like the old rules, we want to know if it's moving in a straight line, there's strong momentum, we're watching that. We're also watching things. If there's a zigzag, the momentum's not strong. And particularly, you want the stochastic to be trading above its own signal line. Invariably, it will. There's not an option there. But we're in the trade, and particularly when we're trading during the course of today, like now, it's lunchtime. It's a lot slower. It takes longer to reach targets. Stochastic will shoot up through 89, and as long as it stays above 89, you've heard me say this over and over and over again, stay long while the stochastic stays above 89, stay short as long as the stochastic is below 11. But if we get a stochastic break of the 89, and particularly if it's going to cross its own signal line, there is a good chance the trend is going to reverse. There's a good chance that the trend is going to reverse there. So we can use that and say, okay, as opposed to making 50 points, we're going to make 30, get out. Once again, I'm going to leave that discretion completely up to the individual trader. Okay, the next important thing to do is once we're in a trade, now we're trading basically according to the trend. So once we're in a trade, and we're trading, for example, because we're trading with a trend, the 8 is above the 21. So once we're in a trade, move to the higher time frame. So what I'm suggesting is on 5 minutes, 8's above 21. We've hit the button, it's broken the fib level. We've put our high, swing low target in. What you want to look for now is continuation. How strong is this trend going to be? So once we're in the trend, moving to the higher time frame, in other words, 15 minutes initially. And watch to see there if 8 is crossing 21, because if we've crossed on 5 minutes and then we go again and cross on 15 minutes, and once 15 minutes is crossed, we cross on the hourly, it just gives you this comfort that you're probably going to go from that target to the next target to the next target. So we always jump to the higher time frame for confirmation of this whole lot. Okay, so let's have a look here this morning. This is the updated fib. I've done the swing high, swing low, and we got moving average crossover here this morning. On this time, 9 o'clock, so 10 o'clock our time, but we'll just use this time here, 9 o'clock. So we could trade 77 to 89. We couldn't trade above that. But at 9 o'clock, as it crossed over there, jump straight to the 15 minutes. There's 9 o'clock there. And you can see on the 15 minutes that in that candle, the 8 was crossing the 21 as well. So that gives you a good feel as to where it goes. And from there, we can jump straight to the hourly. Straight to the hourly, get 9 o'clock, 8, 9, there it is. And on 9 o'clock candle, the 8 and 21 had already crossed over here last night. But on the hourly, the 8 is above the 21, which means on the hourly, the trend is up. So 5 minutes got us in, 15 minutes confirmed, and we're trading in the direction of the hourly trend. We're going to go to more significant levels, I believe, because we're using various time frames to confirm the trend. Okay, guys, that is the system. I don't think I've forgotten anything. We've dealt with it all. I will get those set of notes to you, but before I do anything, let's see if there's any questions.
Can I ask a question?
Sure. Yeah, Derek.
I mean, what you're saying, I like what you're saying, is that we must look at the next time frames.
Yes.
If we see on an hour it has crossed and it looks, you cannot go and move the TP to the hourly TP.
Yeah, absolutely.
Because that is actually, then we know that we, of course, then you can make more, of course, the levels between on your flip level on the hourly is based on your weekly high low.
You can, but we get.
And you should take the TP from the 40 to maybe 150.
Okay, we're going to change that, Derek, when we look at the strategy. So I've got the foundation in place, but very shortly, particularly on the Aussie, let's do an example on Aussie. Now, I haven't prepared it, so I'm just going to go for a new chart here, because the concept must be the same. Let me just get to a template. I want the ABC template. And I just want to add in here quickly. And I'm doing this particularly on the Aussie because of the spread. I'm concerned about the spread on the 5 minutes. Okay, there's our setup. So, just going to go back in time. You agree with me, this is a significant low here. And that's a significant high. To put a fib in. So we've identified that historically. We're not trading in the zones between 89 and 100 or 11 to 0. Look how it's just bounced now, 11, and hasn't got to the 0. Do you see that we would have been stopped out here, but we wouldn't have there. So we're going to zoom in now a little bit. We're going to zoom in there a little bit and let's start looking. We're only interested in trading on the hourly on condition that the green dotted line is below the red. So we're looking at it from here. Okay, so let's just take the setup from there. As it broke there, we had our trigger short. Yeah, we had the first trigger short there. I'm going to put it in like that because then stop. And then we're going to have target. I'm not going to worry about swing high, swing low right now. This concept. Now we can identify already that trigger short there, target there is 655 points. So what I'm thinking, Derek, is we take those levels and we also put them on the 5 minutes. I'll put them in a different color, like I do on the daily high lows, to identify where our targets are on the hourly, because surely if the trend is down on the hourly, we're going to reach those targets. And then we can start checking on the 5 minutes, for example, we've gone short, but there's an hourly target just below it. We can start watching it. I think, does that make sense? I think that's answering your question.
Yes, I do.
Okay, awesome, thanks. So what we got here is we got halfway, so stop move halfway. Agreed? Let me just get that into a blue. We got to TP here. Then we took another short just before market closes, so you have to be able to carry overnight. We got, we reached target. Okay, so we took TP there on open. Then we got the next trigger there, the break of the 50, stop moved halfway. We got to target. It bounced off that 38 perfectly there. Then we bounced up. We would have taken this one here on break. Stop halfway. Oh, it got 476 and 407. It got 30 points shy of target. Let's just make the assumption then that stop is halfway. It got there and it triggered stop. I've got no issue with that. But I don't think so. I think once we've dropped 604 points within 3 hours, I really don't believe we would have gone into a negative. But anyway, let's just take it from strategy. Breaks that level there at 38. So at that point, stop was at the 50. As it got halfway, stop move halfway. That got to target. Now it broke there as well. So in that case, we would have been trading 23 to 11, and that one definitely would have stopped out with that being halfway. We then broke 23. Stop initially would have been at the 38. As it got halfway, stop moved halfway, and we hit the 11. So 1, 2, 3, 4, 5 trades, and in essence, one stop. I mean, it's huge money we're looking at here. So I'm going to very shortly start combining the hourly into the 5 minutes, if that makes sense, on all of them. Okay, let's see if there's any other questions. Nothing. Okay, guys, hopefully that helps. I'm going to get that little setup that I typed out there. I'm going to post that on the group to you just now. And then as soon as the Zoom recording is available, usually takes an hour and a half to 2 hours, something like that, I'll post it for you. But thanks for your time, and we'll keep on trading.